And so welcome now to the next video. Today we'll be learning about adjusting entries. And we'll be answering a set of questions up to number 65. Mahaba-haba siya. So we'll be dividing this into two separate videos up to let's answer up to number 29. Let's decide up to number 35. And so let us start. Number 1, what type of entry will increase the normal balance of the service revenue? And the answer here is credit. And the mapping system where all revenues are credited. What type of entry will increase the normal balance of accrued expenses? The answer is credit. What is accrued expenses? These are liabilities recognized by the company. Here is an example that despite that there is still no cash received or cash paid, we recognize it. So one example is when we issue note from a bank, for example BDO or BPI, and then we must pay interest. However, the adjusting entries or the issuance of the financial statements ends on December 31, but the note matures on March. Yeah. So even though that the note is maturing on March, we will recognize its interest expense up until the date of December 31. So I will cover a separate video about this in the accrual. This is an overview video about adjusting entries. So number 3, what type of entry will increase the normal balance of electricity expense and insurance expense? It is a debit. Here, debit. Number 4, what type of accounts are interest receivable and fees receivable? It is a revenue. Fees receivable, interest receivable. From the word itself, receivable, it is an asset. Correct. Number 5, what type of entry will decrease the normal balance of the interest receivable? Decrease. So the opposite of asset is a credit. And correct. Number 6, what type of accounts are deferred revenues and unearned revenues? So don't confuse this as revenue accounts, but they are liability account because of the matching principle or revenue recognition principle. And so number 7, what type of entry will decrease the normal balance of the accounts deferred revenues and unearned revenues? The opposite of liability, debit. And number 8, what type of account are prepaid insurance, prepaid advertising, and prepaid expenses? From the word itself, prepaid. All prepaid are assets. Okay, these are liability. Assets, sorry. And number 9, what type of entry will decrease the normal balance of these prepaids? And decrease, from the word itself, decrease, will do the opposite. The opposite of asset is a credit. And number 10, what type of account are accumulated depreciation and allowance for doubtful accounts? They are contra accounts, where we recognize it in their opposite of their normal credit balance, of which the account they are being offsetted. So accumulated depreciation is offsetted in equipment, while allowance for doubtful accounts is offsetted in accounts receivable. So they have a debit account, a debit balance. So we credit it since it is a contra account. And this is contra asset. So what are examples of contra liability and discounts of notes payable? And so number 12, in case of a company accrued interest expense, which of the following occurs first? Yan, the interest expense first. Yan. So here in our example, that we can see that cash was paid later and accruing occurs first. Here also applies in a interest revenue, where we recognize it first rather than before cash is received. So number 13, in the case of the bank's accrued interest revenues, which accrues first, again, earning the interest first. Number 14, in the case of a company deferring insurance expense, and from the word itself, defer, so it must be a prepaid. And defer is synonymous to unearned revenues. So here, paying the insurance company goes first. Yeah, cash goes for first here, and also in prepaid. So this two, cash goes first, while this two, cash goes last. And number 15, in the case of a company's deferred revenues which occurs first, and receiving the money first. And number 16, and which of the following will be included in the adjusting entry to accrue interest expense? Interest expense, this. We can see there is a credit to accounts payable. Number 17, which of the following will be included in the adjusting entry to accrue the interest income? Here, we have a debit to interest receivable. And number 18, the adjusting entry that reduces the balance in the prepaid insurance, prepaid, will include, is the adjusting entry, will include a debit to insurance expense. Number 19, the adjusting entry that reduces the balance in deferred revenues or unearned revenues will also include which of the following? And this is the example. A, credit to fees earned or revenues. And number 20, the ending balance of the account prepaid insurance is expected to report which of the following? Take note of the word prepaid. Where prepaid is an asset, it has a future economic value. So hindi pa siya napapanis. Hindi pa siya na-expire. So it is the unexpired portion. Number 21, the ending balance of the accounts deferred revenues, nabubulol ako dun na, should report which of the following? It would be the original amount of fees received in advance from a customer, however, which they are not yet earned. Yan. Kasi kapag na-earn na siya, then we will recognize service revenue or sales revenue. However, here, it is not earned, so it is a liability. Number 22, which type of adjusting entry is often reversed in the first day of the next accounting period? This is an accrual. And the last step of the accounting cycle is a reversing entry. And it only applies to accrual and accrual only. Yan, number 23. Let's go back. Typically, an adjusting entry will include which of the following? 1, balance sheet account, and 1, income statement account. And correct. And here an example. This is a balance sheet account. This is a balance sheet account. This is an income statement account. Here, example. This is a balance sheet account. This is an income statement account. Yan. So, it applies for this 4. Yan. So, number 24 na tayo. Problem siya, mahaba-haba. Yan. Yung pinaka-essence nito ay yung company ay umutang ng 100,000 sa bangko. So, what date should we record the adjusting entry? Again, we record it on the last day of the accounting period or the calendar year or the fiscal year. Yan, so it would be December 31. How many accounts is involved in the adjusting entry? It's 2. What is the name of the account that will be debited? Here we have an example. Here it is cash. And what account would be credited? It is interest payable, interest expense, interest payable. It should be the amount of the debit credits 1,000. So how did we derive to 1,000 pesos? So I will just move this aside. I will make a computation. But given here that the company borrowed 100,000 and the interest rate is 12,000. So by multiplying it, we have an interest expense of 12,000. However, take note that it was issued on December 1 only. So we recognize it only in 1 month. So we multiply this in 1 month divided by 12 months in a year. And 12 times 1 divided by 12, we and then ending up to 1,000. So number 29, what would the effect if we fail to make the adjusting entry? Then of course we would be overstating the net income because we don't recognize the expense. And number 31, let's proceed. On number 30, let's proceed. 28, 29, 30. I feel that I have missed 2. Okay. And number 30, it's a problem. The bank lent 100,000 to a customer. Ayun. So in this question, we will do a booking entry in the perspective of the bank. So what date should be recognized? Again, December 31. How many accounts involved? It's 2. What is the name of the account that should be debited? So we are the one receiving the interest. And what should be credited? It is a revenue. Number 34, what is the amount of the debit and credit? Again, same solution of this one. 1,000. What would the effect on the financial statement if the company fails to make the adjusting entry? Again, it would now do the opposite. It will overstate it will understate the net income since we do not recognize the revenue of 100,000. And so let us explain lang what is this. So in December 1, we received the note here. And December 31, we do the adjusting entry. On January 1, we do the reversing entry. And May 31, we record the payment of note. And here naman to 30 to 35, first we recognize the issuance of the note receivable, then we receive the interest, 31, so we do adjusting entries. January 1, we do reversing entries. And May 31, we recognize the proceeds from the note, which is a cash of 106 together with its revenue. Yeah. So this ends our first video. And we'll be answering this next mga question na to in the next video. So God bless everyone.